Okay, we got a classic Wall Street tug-of-war brewing today. You have these huge analyst upgrades on one side.
Right.
And then you look at the stock chart and it's just, well, it's screaming danger.
Yeah, it's a real conflict.
So the big question is, is this real fundamental strength we're seeing, maybe driven by M&A, or is it just analysts putting lipstick on a pig, technically speaking?
Mm-hmm.
Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks.
Yeah.
Today, we're doing a deep dive onto innovation. That's ticker ONTO. And just for context, we pulled this data earlier this morning, October 15th, 2025, around 7:22 a.m. Eastern.
And starting with the backdrop, the macro environment is actually pretty helpful right now.
Okay.
The Nasdaq strong, it was up about 0.8% pre-market. So tech generally has a nice tailwind.
Good start.
But, there's always something. We've got some Fed speeches lined up and the beige book later today. So that could definitely stir things up a bit, add some volatility.
Right. Always something to watch. Okay, let's dig into the bull case first, the fundamentals. NTO, they make these really precise tools for inspecting semiconductors, right?
Exactly. Key supplier.
And the huge news, the catalyst here, is Oppenheimer. They didn't just nudge their price target, they launched it from $130 way up to a whopping $180.
That's a massive jump.
Yeah, and they're citing a smart revised acquisition deal as the main reason. Stifel also chimed in, bumping their target to $120. So lots of analyst love.
And it's not just, random optimism. The numbers, or at least some of them, seem to support it. Our research included a free cash flow analysis pretty recently, and it put on NTO's intrinsic value, its sort of fair value, closer to $164 a share.
Okay, so compared to where it's trading, like the low 130 area.
Exactly. If you believe those fundamentals are what matter long term, it suggests it's, significantly undervalued right now.
And the market, or at least the options market, seems to agree, right? The immediate sentiment looks really strong.
Oh, incredibly so. The put-to-call ratio, the PC ratio, is just 0.16.
Wow, explain that real quick.
Yeah, so that basically means for every one options contract betting the stock will fall, a put option, there are more than 6 contracts betting it will rise. Those are the calls.
6-to-1. That's conviction.
It is. And a lot of that action is focused right around the $135 strike price. People are betting it pushes past that level.
Okay, bullish fundamentals, bullish options sentiment, but then there's the other side.
Right, and this is where it gets tricky. Despite all that call buying, you've got a pretty chunky short interest. 6.3% of the shares are sold short.
So sophisticated investors are actively betting against this rally.
It suggests some serious skepticism is baked in, yeah. And when you look at the actual price chart, the picture gets, much gloomier. The long-term trend, believe it or not, is still technically bearish.
Bearish, even with the $180 target and the $164 intrinsic value. How does that work? What are the charts actually showing?
Well, the momentum is the big red flag. Multiple indicators are showing the stock is losing steam fast. It's not just slowing down. It's actively shifting towards the bears.
Like what specifically?
Things like the RSI, the relative strength index, it's heading down towards oversold. And the MACD, another key momentum gauge that's been negative for the last 4 days straight, it's pretty decisive selling pressure building up.
Okay, that sounds pretty dire. And you mentioned something about volume too, a conflict there.
Yeah, this is really interesting. There's one indicator showing some minor accumulation, maybe retail buying on the way up.
Okay.
But the broader money flow, especially looking at larger trades, has been consistently negative for weeks, actually.
So big players might be selling into this strength.
That's what it suggests. It looks like distribution. Institutions might be using this news-driven rally as an opportunity to quietly unload shares, not to buy more.
All right, let's put it all together. We've got this huge $180 target, strong intrinsic value, bullish options, but then a bearish long-term chart, feeding momentum and potential institutional selling. How do we even approach this? Why lean cautiously bullish?
It really comes down to the power of the catalyst. That Oppenheimer upgrade tied to a specific M&A revision is a very strong, very specific piece of news.
Okay.
And when you combine that with the immediate options betting, it can create this sort of short-term shield. It can temporarily overpower the weaker technical background. The news is just that strong right now.
So it's like a temporary boost overriding the underlying weakness. Okay, so for you, the listener, defining the key levels is absolutely crucial here. Where's the battleground?
Exactly. For the bulls, the key is to push through and, more importantly, hold above that $135 to $136 area.
Right. That zone includes the pre-market high and that big options strike.
If they can hold that, it opens the door to maybe the mid-140s. That's the bull target.
And the line in the sand for the bears. Where do the technicals definitively win?
That would be a close below $121. That's the recent support level. If ONTO breaks and closes below $121, it likely means the technical weakness, the underlying trend, has finally overwhelmed the news catalyst.
So, ONTO is this fascinating case study, isn't it? A real high-stakes game between the story, the fundamentals, and the actual market mechanics shown on the chart.
It really is.
The challenge for you isn't just knowing these levels, $135, $136 up, $121 down, but trying to figure out who's got the staying power. Is it the analysts looking ahead or the big money trading right now? Maybe keep an eye out for any insider selling data that could be a real tell.
Good point.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.